Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on the premium list at intothecryptoverse.com. That's going to last for one more week. You will get access to weekly reports, 3 weekly videos, and the website where we have a lot of on-chain charts, ROI charts, logarithmic regression, derivative charts, etc. So check it out. You can find a link to that in the description below. Let's go ahead and jump in. So as of this week, we always want to provide an update to the bull market support band. And as of this week, the 20-week moving average is now coming in at around $43,000. The 21-week EMA is coming in at around 43.9K. Now, it's plus or minus a couple $100. Again, it does depend on the exchange that you use. What's a couple $100 among friends? Now, what we want to talk about is a number of things. And one of those is the fact that we were unable to hold the line. Okay, so again, it's not necessarily what we want to happen or what we think should happen. It's just what did happen. Okay, so in the short term, Bitcoin has been unable to hold the line at the bull market support band. Remember, what you want to see is you want to see us go above it and then see follow through on the following week and then to hold the line a bit later. And one of the things we mentioned last week is that, you know, it isn't the best signal when you don't see really any real follow through after breaking through. If you go back to, say, August and September of 2021, one of the things you'll notice is that we had follow through. And then we came back down to test it later. And if you go back even further, back in say April, and we saw all of this follow through really before ultimately retesting it. So when you don't really see follow through, it's not the best signal. One of the things we know is that the 200-day moving average can be an opponent that we really have to work hard to get past, and that's currently at around 48.2K. We were pretty clearly rejected off of the 200-day moving average at around 48.2K. What's interesting, though, is right now we're actually coming down to the 100-day moving average, which once upon a time did hold as resistance. So, again, what does that mean for the health of the market right now that we're back below it? Well, one thing to remember is that a lot of times we don't hold it on the first attempt. Okay, I mean it more often than not, right? More often than not, we don't actually hold it on the first attempt. It does sometimes happen, as you can see back over here. Once we fell below, our first attempt did hold, and we were able to put in a new all-time high. But we do know it doesn't typically hold on the first attempt, even though sometimes it can actually hold. But what also is interesting is that the 20-week SMA is still in a fairly clear downtrend. So the line in the sand for us to get back above is decreasing. Now, again, I understand there's a lot of subjectivity to the idea of the bull market support band and whatnot, but we can clearly see that holding it as support typically yields a new all-time high, right? Even going back to 2017, right? Holding it as support, we typically, go and put in a new all-time high. We fail to hold it as support, you have to try again a few months later, right? You fail to hold it as support, you have to try again a few months later. Eventually, you hold it as support, the market goes back up. So again, it's all about kicking the can down the road, so to speak. Now, that doesn't mean we necessarily have to wait a few more months. There is an example in history that we can find where we closed below and it was like a fake out. Okay, so namely, if you go back to, in fact, 2013 is really what I'm talking about. I mean, it's a slightly different setup from a market structure perspective, but you can see, in fact, that we had a weekly close below, and then as long as we were able to get back above it the following week, you could argue that the overall trend was still intact. So what I mean by that is the current price is 42.3K as I make this video. Again, the 20-week SMA is at around 43K. If we can close the week back above $43,000, then you could argue that the overall trend that we're in is still going on, right? I mean, it still looks relatively good. If, on the other hand, we just see follow through to the downside, we did not see follow through to the upside. If we see follow through to the downside, clearly that's not a great signal. If we don't see follow through to the downside, then again, you're just looking at some type of potential long reaccumulation phase. Remember, in these long reaccumulation phases, you'll even see multiple golden crosses and death crosses, in fact. And one of the things that's interesting about this is it doesn't necessarily mean that the market is about to go up or down when there's a golden cross or a death cross. But what it does show is that just natural volatility can yield a lot of these golden crosses and death crosses. And you can see next in line would in fact be a golden cross if the price of Bitcoin can stay relatively elevated. If it can't, then I imagine we will not see a golden cross and it would just curve back down. So the 20-week moving average, one of the things we always want to do is we always want to go back and see what is it going to keep doing as we continue to sort of step forward in time. And when we look at the bull market support band and we take a measured move going approximately 20 weeks back, we can see that 20 weeks ago, the price was around 58K. So what does that mean? Well, it means as long as we're closing below 58K, which I mean, I'm long-term bullish on Bitcoin, but I don't think we're going to go up $16,000 this week. As long as we stay below 58K, you would expect the 20-week moving average to continue decreasing. Okay. Now, one of the interesting things about, the idea of these averages decreasing and whatnot, it's that when we're above it and going sideways, we know the rest of the market can rally. Like we know the altcoin market can rally. When we're below it and going sideways, you don't really see that as much. And you can even see that reflected in a lot of the alt Bitcoin valuations and a lot of the alt Ether valuations. Even as I make this video, a lot of them are in the red. Not all of them, but a lot of them. So, Bitcoin, this is an interesting week ahead to see if we can get back above the bull market support band. If we are unable to do so, then we're just looking at kicking the can down the road for a bit longer. Remember, if you are a long-term investor, it's these choppy phases of the market that really are the best time to just slowly, figure out your strategy, figure out what you're doing, execute that strategy, and then just wait, right? Just be patient. And eventually the idea would be the market would trend higher. If you guys like the content, remember to subscribe to the channel, give the video a thumbs up. I did recently get back from Miami, so that was a fun trip. Have a lot of great pictures. Maybe we'll go through some of them in a future video. But also do check out the sale on the premium list again, intothecryptoverse.com. You'll get access to all sorts of charts. I would encourage you to at least sign up for a month. If you don't like it, you can always cancel. Cancel at any time. Thank you guys for tuning in. Subscribe. I'll see you next time. Bye.